Good afternoon, everyone. Welcome to the fifth session of our Study Abroad Loan webinars. I hope you've all had lunch, grabbed your green tea, water bottle, a snack, or whatever keeps you awake during these webinars. But I promise you, this one's not going to be long and boring. It's rather going to be super fun and informational. We'd first like to welcome our guest speaker, Mr. Chakravarti, who is an education financing expert with over 2 decades of experience into banking. He's currently the Vice President and Zonal Head at Credila, managing business for South. Thank you, sir, for joining us.
Thank you so much. Hello, everyone. Very good afternoon to all.
I'll just give you a brief to anyone who's new here. At Lawrence Finance, we are your go-to study abroad loan expert, helping students like you in securing their loans, the best offers from both private banks, public banks, NBFCs, and international lenders. We're also running our Study Abroad Loan Fest, which is super rewarding, where you get rewards like MacBook, iPhone, Study Abroad kits worth 20,000 and short gifts on every disbursement. We've also partnered with 17 plus global and Indian lenders, including a wide mix of public banks, private banks, and NBFCs, which means more options for you, better loan terms, quicker approvals, all in one place. We'd like to understand from you, when students are in this journey, they always tend to hear terms like private banks, NBFCs. Could you please help us understand the difference between them?
Yeah, sure. So, am I audible, right? Okay. So, briefly about the banking sector. So there are two types of entities allowed by RBI to extend finance in India. One is the banking sector, which has commercial banks, public sector banks, private banks, cooperative banks. These are banks. So banks simply also open your accounts. They operate savings account, current account, and they also give loans. It's like money in and money out, both will be there. While NBFCs are largely non-banking finance companies, means there are no banking transactions, like no account related operations, right? So it's basically usually own companies. So some NBFCs, which are large in nature, also have deposits. You can put deposits. For example, you have Shriram Finance, you have earlier HDFC Limited, where you can also deposit money. That's it. But there is no savings or current account procedures. So these are the two different types of entities. And most of the NBFCs are kind of focused entities. While banks have a lot of products to deliver, they have more towards reach, uh, distribution, huge distribution. I mean, they will be present in some cities, some towns, some rural areas. So their focus is diversified, not one product. So they are into both account related operations as well as loans. They're into multiple loans. But large number of NBFCs are focused. There can be a retail asset focused NBFCs, can be a corporate banking or corporate loans NBFCs, which do only. There are some NBFCs who do only home loans. They are called home finance companies. Okay. So there are education focused NBFCs. So Credila is one of the example. No, there are a lot more names they have shown earlier where Lorient is associated. So they are education focused, NBFC. There are some transport or vehicle finance associated NBFCs like Shriram Finance and all. They're like usually focused. They only do a particular, product or couple of products, and they are known for faster processing. Pricing wise, they may be equal or sometimes slightly higher, but on overall, they are more of service oriented. They offer faster processes, okay, flexible terms, okay, compared to banks, because banks are more regulated by RBI. RBI, they need to follow a lot of regulations, and also most of the banks have something like IBA, Indian Banks Association. So they have certain, formalities, rules. So it's more of rule oriented. So they have to tick all the boxes. Like NBFCs are also regulated by RBI, but not like banks. So this is a very basic, differentiation I want to for the people to understand. Yeah.
Great. Thank you, sir. Also, how you mentioned that you spent almost over a decade with Credila. Why don't you introduce Credila? Because we also at Lorien have Credila as one of our key lending partners.
Okay. Thank you. Yeah. So uh, I have been with Credila for almost for 2012. Is almost my 14th year now. So Credila is India's first, education financing company. This is started as a only first education finance company. There is no other product. Even till today we are doing only one product, that is education loans. We don't even get into any other product. So it is India's first education loan company, started founded in 2006, and then it was taken over by HDFC, the India's largest home finance company. So then it became HDFC Credila, and last year HDFC, when merged, HDFC and HDFC Bank merged, so Credila has become again an independent entity where HDFC owns around 10%, and rest all are owned by the private equity firms. So Credila is also the largest education loan company with almost a loan book of 45,000 crores. Okay, and it is also number one private education financing company apart from banks. So in the if you rank, maybe we are second in the country after SBI. So SBI is the largest bank because of its size, sheer volume, and also the history. So, but Credila is like in the second place, and we have been very fast growing company also at the same time, because in the last couple of years we have funded more than lakh students. So we do all loans to all countries, all most of the employable courses across the globe. The large countries where most of the students prefer was US, Canada, Australia, New Zealand, UK, Germany, all the Europe. Nowadays, a lot of European countries are coming up. Okay,
Yeah.
like Malta, people are going to Malta also. We have funded some loans to Malta. We have funded loans to Sweden, Netherlands, and a lot of countries, Singapore, Japan. So across the globe, a lot of students are traveling. It's a good sign. uh, Earlier people used to concentrate only a couple of countries. Now people are exploring other destinations. It's a good sign. So these are our large countries what we fund. Apart from, we also do funding within our in domestic market also. We fund to a lot of MBA courses, all most of the job oriented courses, MBAs, undergraduates. Okay, not only tier one, we also fund to tier two, tier three colleges also. We also do some executive loans. So this is about Credila, and Credila has introduced many first things. Like Credila is the first company to come with an unsecured loan of no more than 7.5 lakhs. Like till Credila exists, most of the banks were only doing 7.5 lakhs unsecured loan. So Credila is the first company to bring in, let's say, 25 lakhs. Then right now we are offering up to 1.5 crore unsecured loan for undergraduate programs. And for graduation programs or post-graduation programs, we are funding up to 75 lakhs unsecured loan. So we are the first one to do all these things. Even pre-visa disbursement we have started. We are the first one to start education loan sanction before admission, so that we understood students' needs. That a lot of universities and visas or the entities ask for a fund proof, right? So we are the first one to introduce sanction before an admission, so that student can take the sanction letter and use it as a fund proof. Also, Credila is the only company among NBFCs which has a gazette from income tax department, that so that students can or the parents can claim income tax benefits as per section 80E. We are the only notified NBFC which has this facility. You can see that gazette on our website is very much available. Also, the TCS, the tax collected at source benefit, right? So it is only to an given notified player. I mean, there's zero TCS applicable if the loan is taken through Credila. I can explain it on when time permits, but these are something industry first. Doorstep service also. We used to give doorstep service because our sales managers used to visit customer houses and process their loans. Now it is all digital, completely digital processing. Yeah,
That's great. Thank you, sir.
thank you.
Could you also help us understand the difference between private banks and NBFCs?
Sure. Yeah. So I will not stress upon Credila. I will try to give you knowledge with respect to overall industry. I will try to compare what banks are doing and what NBFCs are doing. And you can also find out, you can which suits you the best, right?
Because you also mentioned that you've had experience with a private bank too. So I guess you're the
Yes,
best to
yes.
talk about this.
Correct. So I worked with ICICI Bank. I was the first sales lead to launch education loans. I have set up the distribution. So yeah, I take liberty to talk about even private banks, how their process is. Yeah. So coming to, as I told you, if you remember, NBFCs and banks, the NBFCs have focus, right? NBFC are focused, right? So banks again are diversified. They have multiple products too. If you go to a branch, they have to sell personal loan. They have to service some customer who comes to deposit money. They have to also try to engage with a home loan customer. Then, of course, there are no specialists there. So you can, most of the NBFCs, especially because this topic is education loan, let's stick to only education loan NBFCs, right? So NBFCs are focused. So large part of the NBFCs have only education loan to do, nothing else. For example, I told you, Credila, we are do only education loan, nothing else. So by default, the service levels, the kind of attention, the kind of TAT or the response time will be much better. Okay, that is one if you go with an NBFC compared to a bank. Two, specialization or the expertise, right? See, education loan is a very, very unique and a different uh, kind of a product. It's not like a templated product, like most of the other loans. Like a personal loan is templated. You are with this income, I'll give you this much loan, this rate. A home loan, this property, I'll give you this much. For salaried, I'll give you this much. Or if it is a apartment or a I'll give you this much. It's all templated, right? But in education loan, things change. It's a very dynamic product because the lot of new courses come in, right? A lot of new countries evolve and countries change their visa norms. For example, same UK was not allowing students to work after study till 2000, I think 19, I believe. Till 2019, they were not allowing students to they have to study and go back within 6 months. They were not
Yeah.
allowing post-study work permit like what currently they are offering, right? So that has now they have changed. They have again after 2019 they said okay you can work for 2 years. Now again recently they are saying it will cut down into 18 months. So a lot of things change, very dynamic in nature. Some university may be ranked among top 50 today. Maybe after 1 year it may drop down their rank or it may move up. So university ranking matters, right? When students select their universities based on their performance, their ranking. Similarly, loans also are assessed based on the university and because that decides the future employability of the student. So a lot of dynamism is there. Okay, a lot of things change. You cannot templatize it. Most of the private banks tried education loan to templatize it. They follow a list of universities, and that list is not updated regularly. They only fund to a specific countries, and they don't change. I'll just give a simple example. Suppose NBFCs, you need a pre-visa disbursement, right? The UK, the Germany, uh, or Australia, New Zealand, except US, most of the countries are asking you to show money before you come. They're asking to pay the fees to the college. Maybe it is 6 months, maybe it is 1 year. Again, country to country, everything changes, right? They're asking you to pay the money before a visa, but banks insist on visa. Their policies are written in such a way that visa is a mandatory document. So they say I'll give you a sanction letter, try with sanction letter. So, but a lot of colleges are not preferring sanction letter. They are asking pre visa. Some of the US universities are asking to show liquid funds before I-20. And we were the first one to release disburse cases before I-20 to get an I-20. So we understood the need. It's not default. It's on a case-to-case basis, but we understood the need. We understood and we have taken calls. So this is the difference between a bank and a NBFC with a live example. Okay, you take other example, other points, very important points and very minute points, which people will only understand when they start applying, right? For example, property, collateral, right? Private banks take only a specific type of properties. The property has to be in the city area. Property has to have all the permissions. Property cannot be open land. A lot of private banks don't take open land, right? And property has to be only a residential property. Some banks doesn't accept commercial property like shop or some office building. They don't accept. Okay, but NBFCs are very flexible here. For example, credit law, we take open land. We take land, even the permissions are not fully there, but a land holding is having a good history. The customer is holding the land for a couple of time. So we are able to take calls. We are able to understand the loan is not on a property. We are giving the loan to a student for his education. So the purpose is completing education and securing a job and repaying us, not to sell the property or not to do business on the property. So property is only a security. It helps to reduce the risk or negate some risk. That's it. So this is how a NBFC views a property, right? So we have taken a lot of deviations in properties. Second, loan to value. What is the value of the property? And what is banks are very rigid. Like I will give you only, let's say, 75% of the property value or maximum 100% of the property value. In NBFCs, the loans are given 200% of the property value. The property value has come 50 lakhs. People have given 80 lakhs, 1 crore also loan. But it's other way around in the private banks or banks. Right? So loan to value is important factor. Value is important. There are cases where the property value was 20 lakhs, but we have done 60 lakhs loan. Lot of cases, not one or two. I'm not talking about one or two cases. I'm talking you that this is there within our policy. We can allow it. Okay. So this will help, especially those cases where customers are not able to provide so much worth property. They hold some property, but they don't have. And still, they'll be able to secure loans in NBFCs. Another point, if you ask me, it is margin money. Yeah, a lot of banks have margin money. Margin money is nothing but your own money. If the total cost is 50 lakhs, let's say there's a margin money of 10%, means you have to put 5 lakhs from your pocket. Bank will give only 45 lakhs. While as NBFCs cover the full cost, there are no margin concept. Full cost, including your all expenses, not just tuition fee and living expenses, but also a laptop, books, okay, your flight ticket, your insurance, everything is covered. So it is cost means cost. We factor entire cost. That is NBFCs. Okay, and another small minute point like a stamp duty. Banks, again, it is state to state. There are a lot of regulations, but this is an important because it's a cost, right? Stamp duty is a cost. Bank is not taking a stamp duty. It is actually the government is taking the stamp duty, right? So they charge stamp duty separately. They'll ask you to go and pay the stamp duty on government website or do the franking on the agreement, and these are very inconvenient processes, right? Bank cannot take that money. While with NBFCs, so stamp duty, because we don't do mortgage the property, we just keep the original documents with us. We have the flexibility, right? So we don't. It ranges from 0.5%. Somewhere it is 1%. Somewhere it takes 2%. It depends if they're doing a registered mortgage, it will cost 2.5% also. This is an additional cost. Bank cannot say that it is my cost because they are not charging. It is actually the cost to the customer. Okay, many people only realize this at the time of disbursement, and at that time there is no option. People will have to go with it, right? So there is no this problem with NBFCs. Another important point is opening accounts, right? banks will mandate you to open an account with them. Even you have an account with them, fine, they'll disburse into that account and they'll have a control on that account. But NBFCs doesn't mandate you to open any account. They'll disburse the money into the account, your parents' account, co-applicant's account. Okay, so these are the broad factors. These are the broad things I have covered. Again, coming to turnaround time, again, see, it's very, again, a very subjective matter, right? But usually NBFCs are faster. They have digital process, so that things are faster. They are more transparent. You can see the terms. Uh, Especially, I'm talking about education loan focused companies, right? So processing fee, again, most of the scenarios it is same, and interest rates, some banks may be slightly better, again based on the ranking. The best rate comes to the only the top ranked college. So you are falling in middle category, you may not get a better rate. But in NBFCs, what happens, the pricing is risk based, not, especially in credit light, is risk based, not uh, institute based or a ranking based, right? We see multiple factors, not one factor. If the student is academically strong, even is secured at a B category college, we still try to offer him the best rate what a bank offers. So we don't differentiate, just based on the institute category. We have a complete risk-based pricing model. So that is one. Can we take some questions? I think I saw some questions.
Yes. So we actually want to open the floor for questions. If anyone has anything, you have to clear any doubts, or if there's any experience that you would want to share, any challenge that you faced with any banks or NBFCs. In the meantime, one of the questions that we have now, sir, says that what are the hidden or extra fees before I get my loan from a bank and an NBFC? So the student has got accepted in UK and wants to know before they get their loan.
See, actually, there is nothing called hidden. It can be a communication issue, or the salesperson may not tell you everything. Okay, but everything, nothing cannot be hidden. Everything is on paper. Everything can be used. See, you can see your sanction letter. I always suggest people to please read the sanction letters. Right, the sanction letter has everything. Most of them, whatever beyond sanction letter, nobody can charge. Right, but still, for your benefit, I'm trying to tell you what could be the likely cost. One, the cost can be your state cost is interest. What is the interest outflow? Two, the processing fee or the origination fee. This is the one-time cost which you need to pay before taking a sanction letter. Then the other cost. Okay, again, they are not charges, they're cost. Means every time bank may not charge. See, for example, uh, banks or even NBFCs both may ask you to take an insurance, which is a loan protect insurance, right? For unsecured loan, something goes wrong with the life of the student. There is the insurance company pays the loan, repays the loan. There's no burden on the co-applicant. Though at least that's a good plan. Okay, it's better. It's like it covers your life, right?
Yeah.
So that's a loan product plan, and that is for the tenure. Most of the banks or the NBFCs offer for the entire tenure. It's a one-time cost. It's not every year you have to pay. Some banks ask you to pay from your pocket. Some NBFCs like Credila, we will deduct it from the sanction amount. So this is insurance cost and the loan product. And this will not be beyond 1%. It will be approximately 1% of your total cost. Plus, there is a forex cost, whether it is bank or NBFC, the money, the Indian, you see, all the loans you are taking are in Indian rupees. The money has to reach your university. Even you use your personal funds, same thing is applicable. There is a forex cost, right? It's a conversion cost. That day, the day which you are transferring, that day there will be a cost, forex cost. Whether even that is mandatory, even if you do it using your own fund. Again, it is not the bank or the NBFC is taking the money, right? Apart from this, I don't think so there are any other cost. See, there are people who have a lot of other value added services. If you take it, there will be a cost. You can always check with them what is the cost. And again, they're not mandated. Everything is, most of the scenarios are if you like it, you opt it.
Great. This also answers one of the other questions we've had. Is it important to get an insurance along with the loan? The next question, sir, asks, is bank like SBI or public banks not a good option anymore, or is it worth checking first with those banks?
See, I'll not be able to comment because, frankly speaking, the whatever experience I have, what is uh, some of the public sector banks are not, as I told you, they're not very focused on education loan. Okay, you have to first travel to their branch. They don't have a dedicated teams coming to you or giving information to you upfront. Okay, uh, some branch may give you very good service. Again, it is some of the branches may not give you good service. Some of the branch manager may be very good, having good knowledge about education loans. Please understand this education loan product. One of another difference I will try to highlight. Many people miss this. Education loan is not a one-time affair with the with the bank or NBFC. It's a every semester you need the money, right? No education loan company or bank will give you money upfront. Everybody will give you semester wise, tranche wise. It's called tranche wise disbursement. So you also need to factor this point, very important point. See, you may have got a very good rate, very cheaper rate. People would have given you a 0.5% lesser than somebody. But no, you also need to factor how whatever the service levels, because you need money, you are in other country, you have to make phone, somebody doesn't answer your call, what you will do? Your father or mother has to travel to the branch, again request, put a request. How painful it is. Maybe you end up paying 0.5% more. In trying to save 0.5%, you may end up paying 1% more. Okay, plus cost of convenience. Okay, so please try to keep these factors. For example, in Credila, the tranche process is completely online. You no need to call anyone. You have your customer portal. You can raise a request. You just need to submit your whatever basic documents like your mark sheets, whatever your scores you secured in the previous semester, and it gets processed in 3 to 4 working days, and it comes to your account again. So that's how. No, because we are, as I told you, NBFCs are focused. They do only education loan. They have to keep the process simple, easier, convenient. Otherwise, they will not be able to compete with other banks. Banks are bigger entities, right? Yeah, I think hope that I answered that question.
Yeah.
SBI
While
wala
I
question.
agree to, sir, I'd also like to add that private banks, public banks, NBFCs, whatever you would want to apply with, you can just reach out to Lorian and we'd help you out with just one application to
Yeah,
all
yeah.
of these lenders. The next question, sir, is more of a complaint. I feel it says my application was declined by Credila after 1 month due to co-applicant salary for collateral loan, and again it reopened a week before, but still now no update.
I will. I can suggest one thing. You can share your application number with Lorient Finance. We will definitely look into it. Definitely, there could be some reason, or there could be some miss from our team. Both ways, we can correct it. Not an issue. So
The next
I'm thinking, I'm assuming there could be some information gap. Definitely, we can fill it. Yes. See, not only us, everybody, most finance sector, any even banks or anybody, there always a yes and no. Both will be there. It's loan, right? Loan can be approved, loan can be declined. Both are possible.
Yeah.
So they
The
did
next question says, I'm planning to study in the UK this fall, and I have received loan offers from both a private bank and NBFC. The private bank is asking for collateral and has stricter repayment terms, while the NBFC is more flexible but slower in processing. I'm confused about what I should prioritize, interest rates or repayment flexibility. What will help me in the long term?
1 second, I'm just noting down the application number. I'll just answer you. Yeah, thank you. Yeah, sorry.
Yeah. So the student is actually planning to go to UK this fall and has a loan offer from both a private bank and NBFCs.
I know.
Private bank is asking for collateral and
Collateral.
yeah,
See, now you have offer with two. It's up to you to decide which is convenient to you. Okay, so yeah, private banks insist for collateral. Okay, you have collateral. Maybe you can explore with collateral, but also check the costs associated with it. Like I told you, stamp duty and all. So is it a beneficial if the unsecured loan deal and the secured loan deal, if the difference is not much, so why should you put your collateral, right? So again, it's a pain. Again, when you want to withdraw the loan, it's a huge process. You have to, wait. The property documents will be with the bank. You have to close the loan, wait for NOC, then wait for. It's a definitely requires some time and follow-ups. Okay, so keep this in your mind, and whichever works for you, you can take a right decision. And I think Lorient Finance is the right uh, person who can team. Probably they can guide you better because they deal with everybody.
Absolutely. The next question asks, do NBFCs support disbursing loans in foreign currency or only INR?
See, there is a you cannot call a foreign currency loan provider as an NBFC. They are not registered in India. Okay. So there is no official foreign currency permission given by RBI in India. So there are only NBFCs which deal in INR. Okay. Foreign currency loan, you need to factor, again, that's a different topic. You need to factor various important points. Okay. They may you may find it a little cheaper. They are not cheaper. And you may find it convenient because some may not ask you any co-applicant, but now they're asking co-applicants also these days. But please check that the loan will be given only for the first year. Again, second year loan, you need to reapply. Again, it is subject to a lot of conditions. While the NBFCs and banks in India, they give you loan for the entire course. Okay. So again, you earn in dollar or foreign currency, you pay in rupees. You enjoy the benefit of that currency depreciation. Thankfully, that's the reason many people are going abroad, so that the conversion benefit is one thing which is a very luring thing, right? That you will miss. And also you will be uh, taking risk with your credit history. By mistake, also, if you miss in that country, you will have very stricter credit scoring norms. So it may impact your credit history. These are the things I am aware of. So that's the reason I'm sharing.
There's a final question that asks, can I get the fund to show in my account during my visa interview?
There are funds. Sorry, I missed your.
Can I get the funds to show in my account during my visa interview?
Yeah, yeah. See, that's what I told you. The pre-visa interview is possible. If you're talking about non-US, pre-visa disbursement is possible. You can show funds because they insist for funds. A lot of colleges and visa authorities are asking to show the funds or pay the fees to the college. So every country has a different kind of a norm. So we can do pre-visa disbursement.
Okay, moving forward. So, would you also help us in guiding in what circumstances you've already told us the difference between private banks and NBFCs, but in what circumstances should a student go for a loan with a private bank, or when should they go for an NBFC?
Yeah, if you ask me, number one, like somebody was mentioned on the chat, see, my father is having a very strong relation with some bank.
Yeah.
He's having an account. He knows everybody there, and they're giving me a good deal. And my services, he has a proven track record of service. Okay, and your property is also with the same bank already, and they're giving the education loan on the same property. Then, in those scenarios, you can choose a bank. And always check this whatever points I told you, like it's a service product, right? It requires service. It is not a one time, you study for 2 or 3 years. You need the you need to use their service. You need the money. You need some, it's a service centric product. Okay, demand service. So you please double check on the service levels of those bank, and you can go for it. And some banks have, let's say they're giving you some, you are a very HNI customer, they give you, you're a privileged customer and you have pre-approved loan, uh, which is a click away, probably then you can try a bank.
And how about NBFCs?
Yeah, as I told you, NBFC, see, NBFC, you have to, number one, factor your first and the foremost point is your need. See, your need is to complete your education. You want to secure your admission in your dream college, and you need to complete the education, right? That's your primary need. And finance will enable, it's an enabler, right? It is not, you are not taking loan and for for some other purpose. Your enabler is education. Sorry, your finance is loan is an education is an enabler for your dream. Okay, so see who is offering you a better deal, better which is really helping you or enabling you to complete your studies, right? So choose. So most of the NBFCs, as I told you, are education loan focused. They do only education loan. So they have devised the process in such a way that student is paramount. See, we call student, many of the banks call customer. That's the difference. We call student, means we are also aligned. We are also thinking like a college. We are also thinking like an institute, right? So NBFCs, yes, for convenience sake, who understands the complete ecosystem. Two, you can also see who is faster, who is offering a bigger loan amount, whose terms are very flexible, right? Who's accepting the property what you have? Because as somebody said in the chat, the property norms are very stringent in private bank. So you check which NBFC is offering you a flexible, who's taking your property, which is rejected by the bank, right? Or who's giving bigger loan amount on the same property, which serves a purpose, right? And yeah, rate, you can always take a decision based on the rate after these ticks have been done. Like once the enabler is ready, then probably you can negotiate on the rate, try to fill the gap as much as possible, and negotiations are possible.
Great. So there's another question, sir, that's asking how do repayment terms and interest rates differ between NBFCs and private banks?
Yeah, see, most of the private banks either offer you if they are going with IBA norms, they can offer you moratorium, but they cannot give you loan beyond 20 lakhs, which is like irrelevant. Most of the current scenarios, you need at least 35-40 lakh rupees because of the high rates, high cost of tuition fees these days. So you have to choose your repayment is very, very important. They'll ask you to pay simple interest or full interest, right? The NBFCs have again, Credila is the first organization which has started something called partial interest. So partial interest is something what your father can pay. Okay, in simple terms, it is not a burden. You can easily pay that amount. But what happens to the rest? Rest gets added to your principal, because we are all aware that you are going to overseas. Your earnings also are much higher than Indian earnings, right? You will earn in multiples of average Indian salaries. So definitely you can repay the loans also faster. We are aware of the fact. Hence, we are charging only the partial interest. Partial interest can be 5,000 or 10,000 rupees. It is a part interest. Okay, let's say a 50 lakh rupee loan, the monthly interest comes, let's say 50,000 rupees. We'll ask you to pay only 5,000. Rest 45,000 gets sent back to your principal. When you start paying the EMI, you can pay it. Or whenever you have money in between, you earn some money, or your father got some funds, he can clear the interest, accrued interest. It's called accrued interest. Okay, so private banks ask you to pay full interest, and they also calculate the eligibility based on the full interest amount, whether your father is having so much income to pay the full interest or not, which is again a problem, especially bigger loans, 50 lakhs, 70 lakhs, 1 crore. These loans have that, no, the interest itself will come around 1 lakh rupees for 1 crore loan, monthly interest. So it's a huge, outflow. So this is the flexibility, and tenure also. We have banks have 10 years, or somebody has 12 years, but NBFCs have 15 years. Average tenure is 14, 15 years is possible. And also the important point is grace period. Banks offer you 6 months of grace period. There is something called course period, means the time, the duration of the course, right? If you're going for a 2-year program, course period is 2 years. Then the grace period is the time for you given to you to choose a job, to get a job and start the repayment. Okay, many of the students may not get the job immediately. Some may require 3 months, some may require 6 months, some may require a year. In NBFCs, the grace period is 1 year. In most of the banks, the grace period is only 6 months, which can be a very important thing. Means before you get a job, the EMI starts. It will be a bit challenging for some of the people. So this is another important point.
The next question asks, does Credit Lab provide a loan without a cosigner?
No. We are flexible about the co-applicants, but co-applicant is mandatory in as per our policy. Co-applicant is mandatory, and co-applicant we can be flexible with the relationship. Like usually we ask for a father, mother, or a blood relation like brother, siblings, or a spouse. If married people, we can also take maternal, paternal uncles, aunts. So this flexibility is there with us. Again, some private banks doesn't have. Yeah.
The next question is asking about pros and cons of taking education loans from a private bank versus an NBFC.
Pros and cons, I think we covered, right?
Yeah.
We covered all the pros and cons.
So also, as per the discussion we're having, it brings me to thinking, looking ahead, do we see NBFCs becoming more dominant in the study abroad loan segment? What are your thoughts about this?
Yeah, of course, the NBFCs are fast emerging in the education loan space than banks. You see their, the presence, the distribution, the number of loan takers from NBFCs are on higher side compared to the private banks. Okay. Also, the private banks doesn't are not so no the distribution is not fully present. Also, they are operating in only smaller town, bigger towns, bigger cities. In fact, okay, tier 2, tier 3 cities, their presence is also not there. So definitely yes, NBFCs are leading.
Great.
Yeah.
So moving forward, let's say I'm a student who wants to, secure a loan for my abroad studies. What all should I keep in consideration when I'm choosing the lender, whether it's a public bank, private bank, or an NBFC? What all should I think of?
Yeah, see, again, probably it is kind of repetitive. Probably I covered more during my previous discussions. See, largely, as I told you, you should see whether if education loan is really playing the enabler role or not, right? Within what you have, like you have collateral or you don't have collateral, means you should check some who's giving you unsecured loan of your quantum of the amount, whatever you need. That's the first point. If you have collateral, again, you should check what is the loan amount I'm getting. That's called LTV, loan to value, right? How much loan on this property the bank or NBFC is giving. Again, second point is whether they're accepting the collateral or not, whether this is acceptable or not, right?
Yeah.
Then interest. What is the interest outflow? What are the other other cost associated with that? Like I told you, stamp duty. Somebody may ask you take investment plan, insurance. Somebody may ask you to take some other bigger insurance. What is the cost, right? What is the cost that I'm going to incur? Okay, that point is very, very important because insurance is not same across all banks and NBFCs. Some bank may ask you to take a very, very bigger insurance. It can range up to 4-5 lakhs. Okay, same product somebody may charge you. Let's say we are charging around for 50 lakh rupees loan. Maybe we are charging around 50-55,000 for entire tenure. But same plan, some other bank maybe tied up with some other insurance company, may they charge you 1 lakh. Right? It's a huge difference.
Yeah.
Right? So what are the other costs associated? Not just interest. What are the other costs associated? And repayment terms, like my father or mother, my co-applicant, does they feel burden of paying this amount? Will it be a burden on our family? So that also important point. So I told you partial interest point, I told you simple interest point. So that need to be evaluated. And third point is whether it is serving the purpose. My university is asking you to me to show the funds, whether the lender is giving me the loan before visa as per the university terms. Will they give? Will they give a sanction letter before admission? Will they give a disbursement before visa as per the country or the college norms? So these are the important points they need to check.
Great. Thank you, sir. We also have certain testimonials here, a very few of them, just to showcase that there's no bluff here, there's all real talk. We've helped hundreds of students in fulfilling their journey with public banks, private banks, NBFCs, and we can do that for you too. And we now open the floor to questions. Anything that you have, any doubt that you have, you can ask sir right away and we'll clarify all your doubts. In the meantime, sir, I have a few doubts if you just, like to help me out. Because you deal with students also and you've been dealing with students for so long, what do you think would be one major myth or a misconception that students or parents have around NBFCs or private banks when it comes to loans? Because I feel as Indians, a lot of us feel that a public bank is better. Why not just go to SBI only for any of my loans?
Anisha, somehow your voice is very low.
Can you hear me now?
Yeah, better, better.
Yeah, so what I was asking is that what do you think is one major misconception or myth that students or parents have around NBFCs or private banks for their loans? Because I feel Indians have this perception that public banks are somehow better.
Yeah, see, misconception, I don't call it misconception, maybe lack of awareness. Okay. So one is that many people are not aware what is an NBFC. That's a major problem, right? People are not aware there is something called NBFC and something called bank. That is one. People only see banks are the only primary no organizations which give loans. Okay. So many are not aware this. A lot of the student generation or the youngsters know the options, but parents doesn't know. And second thing is many people feel that public sector banks are way cheaper, very flexible, or definitely I'm sure many won't think they are convenient. They would
Yeah.
have not tried the private sector, or the issue is because of the accessibility, right? Especially people in rural segment, they don't have access to this easy finance. The most of the private lenders are not there. The lenders are available there are public sector banks, right? So maybe that's another problem. They are not aware. So it's largely awareness issue. And secondly, many people think they are very, very cheaper, but definitely, they're not cheaper. You need to check the other hidden, somebody said hidden, right? So other points, other total cost. It's not the bank or the NBFC who charges you. What is the total cost associated? Simple. You are making, let's say, 10 rounds. One time to submit the application, second time to check what happened, second time to again, third time to get that uh, sanction letter, fourth time to take the bank person to your property visit, fifth time to go to the lawyer, sixth time to again sign, get the agreement copies, then sixth time to sign it, seventh time to get the disbursement check. Just see how many rounds you made. This is how some banks work. Okay, now this is all at convenience. Probably some of the NBFCs or private lenders, you may not need to make even one round. So you may end up saving 0.5%. But see the cost of this 7, 8 rounds, number of follow-ups you did, number of the time it has consumed, right?
Yeah.
Yeah.
So also, so because you work with a private bank and an NBFC both, do you have any a real life case study maybe that you could share with us where a student must have benefit, they would have more benefit from an NBFC over a private bank or a private bank over an NBFC?
Yeah, see, like that, there are many are there. See, number one is uh, maybe as I told you an example, there was a student who is academically very strong. Okay. And he was not going to a tier one college, going to tier two college. And his father, who was a co-applicant, is also financially very strong, right? So he came to bank, and bank was not offering him the best rate, saying that you are not going to the tier one college, right? So if you would have gone to an NBFC, you would have got the best rate. Okay, basis the overall profile, because the overall risk is zero. Student past work, he also got a work experience of 2 years into relevant field. Even he's going to a tier two college, is you know uh, we know that he's going to secure the job faster than probably the tier one college guy, right? So he ended up charging, paying more. And ultimately, what after a couple of years, what we understood, the tier two guys, college guys, we funded are getting better job, better repayment than the tier one guys. Tier one guys maybe started enrolling into PhD programs, again, delaying their employment. So these things, minute things, I think the banks miss. It's all optically, it looks very good. Somebody going to tier one college is definitely, yeah, they're really full, all respects to their efforts, their knowledge, and their commitment towards their career. But it's doesn't mean no, the tier two are not deserving, right? So like that, there are many such examples. There are co-applicant banks go with income norm, like minimum income norm, where NBFCs usually, I seen credit law, we funded, people with very low, even agriculture profiles. We don't have a formal income proof. We funded basis the student, and we understand that the parent owns a good amount of agricultural land, and he makes his living. We understand this, right? So basis an agriculture income certificate, we have funded loans. So this flexibility, this understanding, some of the banks don't have.
Okay. A final question that I have is,
Yeah.
if you were advising your own child who would be planning to, go abroad for their studies, would you choose a private bank or an NBFC?
Yeah, definitely. If you ask me, I will definitely choose NBFC because of the flexibility. Because I understand this market very well, so NBFCs definitely have more flexibility.
Great. Thank you, sir. Thank you for helping us give this information to all our attendees. Before you go, I would like to just inform you again about India's biggest study abroad loan fest organized by Lorien Finance, where we have 17 plus global and Indian lenders giving out loans for your abroad education. And you also get to win amazing rewards like MacBook, iPhones, study abroad travel kits worth 20,000 and assured gifts on your disbursements. So apply now. Thank you for being here, sir. Thank you, everyone.
Thank you. All the very best to all the bright minds. Have fantastic time ahead. Thank you, Lorien Finance, for giving this opportunity. Bye. Thanks, Anisha.
Okay.
Bye.